Okay. Okay, so anybody who's watching, Anais just asked kind of from the beginning, where would you look on the internet for information about stocks? Like talking to people about stocks. Is that right? Is there anything else you would add to that?
Just like what's happening in the market, things you might want to look at, maybe specific companies that you all, I don't know, collectively buy, and like you want to talk about things like that.
And so my initial answer was I more trade crypto, but for stocks, the things that I would look at, I would start with Reddit. And for Reddit, I would look at our stocks, and you just go to Reddit. Reddit is a website, if anybody doesn't know, and it has a bunch of lots and lots of channels of people talking. So our stocks, penny stocks is below $5, our investing, and our stock market. I'd say those are the big ones for Reddit. The way we got to this is really just going to, the way we got to this was just really going to Google and typing in best Reddit channels for stocks. And you can do the same thing with Twitter. You know, and you can find lots of different places to find stocks, people to follow on Twitter. There's just so many people talking about this stuff that there's no best way. There is, this is what it's called, Stock Twits. So Stock Twits it's fun. I like Stock Twits. And it is a discussion of people having sort of real-time conversations about the stock market. Oh, you have to sign up? I have an account. I just don't remember what it is. Let me see if I can find my account. I doubt I even wrote it down. I did. No. Let me stop sharing for a moment. Okay. I haven't used it in a while, but here's Stock Twits. So you just have to sign up. It's free. I'm sure they have some paid option, but you know, so you can just look at the watch list. This is just people talking. You know, they're just talking, and it's very, you know, it's Twittery. It's like Twitter, but it's only about stocks. When you get to know people a little bit, you can maybe follow some people. I don't know, there's nobody I follow. You can see what's trending now. Obviously, all of these, for anybody who's not familiar with stocks, these are called the ticker symbols. So up here, you could always type in a symbol, like HBAR is a kind of crypto. Most of these are just companies. Most of these are not cryptos. So let's say you wanted to know about, is there anything you want to know about, Anais? Okay, so let's say Tesla. So it'd give you some, like the sentiment. Oh, Facebook was the one that just recently lost that money. Oh no, it's called Meta now, isn't it? No, can't find it. That's Facebook. Facebook stock. Oh, these are people? No, that's a person. I don't want to follow that. Okay, so let's look at some
Siri says the name for Facebook is Meta Platforms.
Meta Platforms. So here's some other things that I look at. I look at Yahoo Finance. Yahoo Finance is great. These are all free, by the way. I look at Stock Twits. I look at FinViz. FinViz is financial visualization. And that's going to be beyond most people at this point. FinViz gives you a lot of data on companies. Let me close these out. So FinViz, for example, if you want to know the top gainers, unusual volume, places that have new low, top losers, Facebook is FB, okay. So you get a lot of information. One of the really good things about this is, let's say we chose a stock. I want to know about Facebook, Meta Platforms, yeah. Oh, they didn't change their ticker symbol. So ticker, T-I-C-K-E-R, is these. So here's an example of Facebook. Now, what you can see here already is you see, you know, all of these, the green candle, it's going up, the red candles, it's going down. How long is this? This is from April to February. This must have been the recent crash people were talking about, where people said like very quickly, Zuckerberg lost like $20 billion or something. Here's all the really important data that, you know, we'd get to later if we're talking about investing. Like, we're not going to talk about any of this today, but this is key data that you really need, whatever your investing sort of plan. The other thing that's useful about this website, FinViz, you can see how different platforms have either upgraded or downgraded it, which means they think you should buy it, you should hold it. Like, these are what experts are saying, like Morgan Stanley. What do they say? And then the really cool, here's every single news article you could find about it. And then on the bottom, you find insider trading. So the chief legal officer recently has been selling shares. A lot of shares, it looks like. Well, not that many. But you can see Zuckerberg has been selling. Oh my God. Look at how much stock in Facebook Zuckerberg is selling since August 30th. So he's selling like 300 something at a time. That is worth, oh no, that's the number of shares. Oh, that's the cost. The number of shares, here's the value. These are millions of dollars. Look at how much Zuckerberg is taking out of the company. 26 million, 29 million, 29. This is like a series of $30 million sales. That doesn't look promising.
What? Okay.
So like FinViz is pretty useful as a website if you're looking at a specific stock. The next one I tend to look at is barchart.com. And all of these give you, you know, slightly different information on a stock. This one has like a little bit more news. So if you just want to read different articles about stuff, it can give you the overview of different markets. But it's got a lot, this is more news type stuff. That's a good one to look at. Zacks. Most of the good stuff on Zacks you have to pay for, and I'm not going to, but they give you like, they're stock picker. They pick stocks. So like the bull of the day or the bear of the day. And they'll talk about a lot of like good stocks. I mean, Zacks is pretty good. So like they have ranks. And so you can look at all their ranks and see how they're ranking stocks in different industries. But all of these you kind of got to play with. And then, you know, Market Watch is the other good one. These are Investors Business Daily is okay. Motley Fool is not very good anymore. These two you have to pay for. That's probably it. I think social media? No. News and info. Benzinga is also pretty well known. Oh, the Rams won the Super Bowl. And
Eminem
these are
performed.
just, sorry?
Eminem performed.
I heard he didn't even get paid, that for some reason he did it for free. Did you see it? Was it good?
Oh, I didn't. I just listened to the song afterwards, but
I'll have to Google it. All right, anyway, this is all different news. So that's about that. And then, so let's say we want to, I mean, we won't spend too much time. Let's say we're trading something besides crypto. Obviously, we don't want to trade Facebook. Let's see how it's doing.
Obviously.
Let me open a different chart. This one's got all my stuff at the bottom. So this is whatever we were talking about last time, last semester. Facebook, 30 minutes. Let's do 4 hours. Oh yeah, here we are. This is where Zuckerberg lost $28 billion in one day. Look at that red candle. That is beautiful. So what do we have on here? We have zigzag. Okay, now everything's off. So we just start with a raw sort of chart. And the question is, if you're interested, I mean, kind of my goal for this club is actually trading, like actually being able to legitimately buy stock or crypto and understand, oh my God, it's so crazy. It's such a big move. Man, from
Very, very big.
22 all the way down to 250. What was going on in the market? Like, how could anybody have predicted this? So there's something called back testing. Back testing is when you have a plan and you want to know if your plan works. And so you look back in history and see, like, every time the stock was doing this or that, then this happened. So, like, for example, this point right here would have been a great time to invest, to buy, right? Because at this point, it was obviously going to go up to here. So if we could try to figure out what was happening at this point, you know, so that's kind of one of the ways we start is sometimes when I'm looking at a stock, I'll actually start by just drawing a line at all these places where, like, this would have been, so let's say for blue is buy. Mm-hmm. And this would have been a good place to buy something. Then this probably would have been the best place to sell. This whole thing is, let's go to a daily chart. I mean, we can even go farther. We can go to a weekly chart. So this is Facebook on the weekly chart.
The first buy was here.
The first buy was, I mean, God, if you got in here at 251 and it ran all the way up to, you know, 384. So here's your buy. I guess here's your sell. We can kind of just start looking at that. Let's make that a pink line. No, let's make that a purple line. No, let's make that a green dash. Okay. So we have a buy and a sell. Actually, these should be kind of reversed. I feel like the green dash should be buy.
Yeah.
The blue dash should be sell. So the question would be, what's going on? So that's one thing we can kind of look at. We can look at stocks. We start on a big time frame, which means we start on a weekly or a monthly. For anybody who doesn't know, that means each one of these candles is a week. Now, there's a lot that goes on in a week, you know, so that's really important to understand. So, well, okay, let me just say this. So if we're talking about, this is 1 week right here. Just this candle right here, this green candle is 1 week, right? If we were to zoom out on this one candle, let's even make it like a little bit smaller. So this is kind of our green candle. We're really just trying to focus on that. If we make this into a daily chart, let's go find this green candle. On a daily chart, there was a lot of money to be made. You know, what looked like that one green candle was actually broken up, obviously, into 7, right? It's days. So 1, 2, 3, 4, 5, 6, 7. That's our weekly chart is, or maybe it's broken into 5. I don't know how they do it, but, you know, and then, so each of these candles is now 1 day. Like if you had bought it here, it wouldn't have looked like you made the right move really for 3 days. You know, for 3 whole days. In fact, one day it would have started to go down for a whole day. It didn't go down a lot. Now there is a way to look at these candles and read them, and that's called candlestick math. And there are ways, and we can talk about that, of like different symbols and patterns, you know, sometimes. So for example, there's a special name like for this candle right here. This candle. This candle right here has a special name. I don't know if that means somebody messaged me, but I can't see you if you did. Nope. So like this candle has a special name. It's called the Doji Candle, and it means indecision. So each candle has different meanings. Like this red candle here that has only a very tiny line called a wick at the top and a very tiny line called a tail at the bottom. That's means something very different than a candle like this green one that has a huge tail at the bottom, or this red one that has a long wick at the top. These all mean different things, but that's much more sort of advanced. So if we then look at this daily chart and you break it down into like 4 hours, let's go find that circle. Let's break it to 8 hours to make it easier. Where was that circle? So now if every line is 8 hours, you can see that when you bought this, even though you bought it at a great price, there would have been just a long period of time that it looked like it was doing nothing, even kind of going back down. So each of these candles, and then this one 8-hour candle, obviously that's where something really big happened. Who knows what? So like, I think it's important for us to be looking at things on a daily basis. I think daily is probably the most important. But if we want to find these places where it was the perfect buy and the perfect sell, we look on the weekly. That gives us like our starting point. And then we want to know at this point here, and again, this is like right here, if I make a circle this big, this circle right here is 1, 2, 3, 4, 5 weeks. So that's kind of a ridiculous, you know, that's a huge circle. Like we don't want a 5-week circle. At most, we want like a 1-week circle. We want to know what was going on here. And that's called back testing. So to back test, we're going to look at this chart and we're going to look at a bunch of other things that were going on at that time. And there are different tools that we use. So a couple of things before we get into that, and I think that we can work on, like if we meet in the future, we can talk about different types of tools. So the one that I have right now on is the RSI. Why is this? There should be a lot more history than 2021. Oh, I have it on crypto. That's why. Right, of course, on NASDAQ, it should go back very, very far. Oh, we must have looked at this before. Okay. So yeah, so here's the NASDAQ looking at the weekly. Facebook goes all the way back for a long time. Right, it goes back to 2013. That makes more sense. And wow, it was just consistently going up for a long time. So if we wanted to know, like here, this was clearly the buy, right? This right here was the buy recently. This was in, oh, that was 2 years ago. It's not, but, so what we would want to know is pretty much this candle, like how'd that happen 2 years ago? What were we looking at? What would have let us know we should have bought at this point? And when you buy now, the things you need to know, like let's say you think this could be a good place to buy. So we want to look at indicators, like this indicator is called the RSI, the relative strength indicator. When it gets above this mark, I mean, that's usually a good time to sell. Right now, it's way below. That could be a good time to buy, could be. So the things we need to be absolutely clear on is this would be
Did you say RSI indicator?
yeah. So this would be, I think, what we can kind of close with today. If you want to buy something, and what I think we can do together is we can talk about some of the indicators you need to know, like RSI. There's another one called MACD, MACD, that you have to know. Like there's some you kind of have to know.
Yeah, I remember.
Have to, of course, but they're good to know. And then there are other things like that we talked about in the last time we were meeting, which kind of has to do with lines like this, these horizontal lines, where you might say, okay, so is this an important level? What makes something important? It's important if price respects it. How do we know if price respects this level? Well, what happens when price gets to the level? So here the price touched it. It did not break through. It went back up. It touched it again. It did not break through. It went back up. If we get that a third time, which we don't, so I would say this is not a super important level, but we're looking for levels where over time, it gets touched and respected a lot. A weekly level, so are we finding any? This looks like it could be a level, right? The price kind of, it tested it and then went back down. It tested it and went back down. It went over a little and went back down. Then it went up and now it went back down and tested it. And now it's a support, it's a floor. You know, sometimes it's a ceiling and sometimes it's a floor. But either way, if the price respects this level, it means something. So you could say it means something on a number of levels, but usually the techniques that we use, everybody uses, from the big fat cats on Wall Street and the professional traders to, you know, like investment clubs, and we're all using the same stuff. Everybody's using this website, TradingView. Everybody's using the same lines. And that means a lot of people put orders into their, whatever your exchange is where you buy stocks, like I use TD Ameritrade. So whatever you use, you can put in an order today. Like, let's say you want to buy this stock at this price. So at 157, let's say that's your plan. Okay, you can put in that price today. Obviously, you're not going to get, it's not going to get filled today. But if you think that's a good price, put in that price. Generally speaking, we do not want to buy today's price. There is no such thing as a good price. I mean, there sort of is, but like, the point is, you want to be able to choose a price. You want, number one, a planned price that you want to buy this. You don't want to just say today's a good price. You want a planned price. So how do we plan a price? Well, there's common ways. Most common is to use Fibonacci levels. So with a Fibonacci level, you would draw from a low to a high. So you want to get it from the lowest point to the highest point. You can also do a high to a low, doesn't really matter. And there's lots of ways to do this. These are my own different templates that I've made over the years. Let's look at this one. So all of these are levels. We're starting, let me reverse this. Okay, so at the bottom is 0, and at the top is 1. And if the price goes down to any of these key levels, the 0.786, the 0.618, and 618, these are all Fibonacci numbers. And you can Google what is Fibonacci number, and you should definitely know that if you're going to trade stocks.
Yeah, no, we talked about it, and also I have nightmares from math class, so yeah.
You have what in your class?
I have nightmares from my math classes.
Oh,
so
okay.
I'm over.
So, a lot of people probably had orders here. This level between 618 and 65 is called the golden pocket. So that might be why it went up here. And people might, so when people bought it here, they might have, no, they wouldn't have known this yet. Either way, the price, maybe here it bounced back up for that reason, because a lot of people had buy orders. Now it's dipped down all the way, it's getting to the 236. I would guess if the price gets down here to 195, it'll bounce off this. Because probably a lot of people who just already drew this, they already have orders sitting on their exchanges to buy at this price.
At 236?
You can do multiple Fibonacci levels. We could try another one from here to here and see, is there any, we're looking for confluence. We're looking for a lot of different things to all point to the same price, whether it's things that got respected. So here, this line that got respected is pretty close to the the 236. So we're getting down to that line. Any of these?
Wait, can you be more specific with the lines? I am very much a bit lost.
Okay, so what I had said is, if you want to draw a Fibonacci level, you go from, and the tools are on the left side, Fibonacci retracement, and you go from recent low to a recent high. Now you could do it to any high. You could do it from this low to this high. You could do it from this low to this high.
And what we're
or you could do it from the very low to the very high.
We're looking for points where there are like the same lines, like the lines at the same places.
We're looking at lines where price has respected it.
Mm-hmm.
And we're looking at places where these lines, you could almost say have like some magic to them. And so we're looking for places. Let's draw an earlier one. Let's draw over here. From like a super low to a high right there. Okay, so the high here is 218.62. Let's just pull that all the way out, 218.62. And let's see if any of these lines are kind of being respected. I mean, we drew this chart just using this, right? This, and then I just pulled it out to the right. So price started to fall. Did it respect these lines? Well, hell yeah. I mean, look, if you were looking here, this was a really important place. If you chose to buy here, this would have been a good place. It would have dipped a little more, but or if you bought, you wouldn't have been able to buy here. But then are the lines being respected? Well, kind of right here. I mean, there's a little bit of like, oops, paying attention to that. Then it went through the blue, came back down, right up exactly to this line. Whatever that pink line is. Oh, that was the earlier line we had. Oh, that definitely seems like it's being respected. I mean, if you had a sell order there, if you saw it going up, you knew this pink line was important and you had a sell order, you would have done well. So it goes down and then it exactly touches the 6.5. And here, if you had a buy order at this 382, look how clean that is. It just touched it. And anybody who had a buy order at this 382 point did fantastic, right? They bought here and then the price just shot upwards and kept on going up for a long, long time. You know, these people who had buy orders at the 382, how did they get this price? Like, where did they get this from? How did they know to buy it there? All they did necessarily is draw this Fibonacci retracement. They just drew it from a low to a high. That's all they did. But the thing is, you can't just draw one of them, you know, you have to try a bunch of them.
Yeah.
And you have to find lines that get respected. So.
David.
Yeah.
So from this huge diving, how can we draw the Fibonacci after that, like from the end of the chart?
Well, so what you might do, I'm not sure after that.
Or should we draw lines before the dive and then?
But I don't know what you're referring to.
And will we predict the line afterwards?
I don't know what you're referring to as the dive.
The chart.
Yeah, but what
on
do you
your
mean, the
right
dive?
side.
Yeah.
If you go to the, yeah, you see this candle, huge candle. It's like diving.
Okay. So for this one, then what you could do is you could draw Fibonacci starting at the high point and going down to the low point where we are right now.
All right.
So you can draw it from low to high, you can draw it from high to low. Again, I would reverse that. And this took me, I definitely didn't get this overnight. This took a while of playing around with this and watching YouTube videos. You know, I mean, I also took a 1.5-year class.
I'll be right back.
But you can watch videos of this stuff. So, you know, at this point, we're down here. If it went back up, you know, maybe it would go to this line, or maybe it would go to this line, or maybe it would go to these lines. So I got to go in a minute. It's 11 o'clock for me now. The only thing I would say is what I was going to say before, which is you shouldn't just be buying things because it looks like a good price, unless you're an investor. If you want to hold this platform for years, well then, hey, maybe today is a good price. You know, but the thing is, it looks like a good price compared to what it was just, you know, a month ago. But if we're looking at like let's look at a monthly chart, is it a good price? Oh, interesting. It's upwards. So like, is this a very good price? I don't know. You know, Facebook used to be a lot lower. Could it go back there? Maybe. But if you believe in Facebook, it might be a good price. I don't know. But the point is, you don't just want to buy it. You know, you want to have a planned price. You also want to know your stop loss and take profit. You know, where we'll talk about that, I guess, another time. You want to know how much money you're risking. Like, because we're talking about trading, not investing. If you're investing and you think Facebook or Meta is a good stock, well, maybe it's a good price and you could buy 1 share today or 10 shares or whatever you want to buy. Like, but that's not trading. That's buying it and holding it for long term, you know, holding it for 10 years. If you're doing that, well, then you know, look at the historical price. Then you're looking also at the fundamentals. You're looking at like, why is Mark Zuckerberg selling all these shares? You know, you're looking at the market. But if we're trading, you know, I'm not a day trader. I don't buy things in the morning and sell them at night. I do sometimes actually, but I'm trying to be more of a swing trader where you'd pretty much have a trade that lasts like a week. So you'd buy it at a certain price and you would expect it to go up or down or whatever in a week. And you have to know how much money you're risking. And your risk is based on your stop loss. Like your stop loss is if I buy it at, you know, whatever the price is right now, if I buy this at 217, if it goes to like maybe, you know, 200, you might say I'm out. And you can set all of that, you know, on the website where you buy things. But you have to know what the stop loss is, or else you could lose too much money. And then you have to know what your take profit is. Generally, if it's called half on a double is like the most basic rule for that. So if you were going to buy Facebook here, you always want, this is over here, this what's called the long position tool. Long means you think it's going to go up. So you always want this number in the middle to be at least 2. So here it's 2.03. So now if my stop loss is, I'll set it here at 200. Now, there we are, more or less. This is all I'm looking for in a trade, right? If it goes down below 200, I'm out. I've lost however much. And if it goes up to 245, I will sell half. Because it's a 2 to 1 risk to reward. So if you sell half, you just took your money back. And now you're playing with house money. Right now you didn't pay for this. Now you have the free shares of Facebook. So that's generally the goal. That's for long. If you think price is gonna go down, then that's short. The other thing is to keep notes on all of your trades and to have a trading plan, which means what are you trying to accomplish? Like, are you just trying to get better at reading a chart? Are you trying to make $100? Are you trying to win 10 out of 30 trades? Generally, the rule is if you can win more than 50% of trades, you're doing great. And if you can win more than 60% of trades, you could work on Wall Street. Like legitimately, that's not a joke. They win about 60% of trades. And the reason that they're profitable is because this thing is 2 to 1. If you're risking $10, you can lose a couple of times. And each time you lose $10. But when you win, you make 20. So you can lose twice and win once and be even.
Mm.
So 50%, you just need to be right 50%. You could flip a coin, you know, like if you get more into this, let's say instead of 2-to-1, you wanted to make it 3-to-1. Now, obviously you could expect the price to go up more, or instead of doing that, you could risk less. So to make this 3-to-1, let's just make our risk less. So now we're going to risk less money. And if it goes up, we made 3 times. So I'll lose $5 on every trade. And I'm going to lose more trades, you know, because every time the price just dips a little bit, I might be out.
Okay, yeah.
I might lose $5 on 6 trades, 7 trades, but every time you win, you're going to win 15. So you can be wrong 3 times and right 1 time and break even. So what a lot of people do is they risk like 1%. You know, you see these percents in the middle. 1% of, let's say you're using $50. What's 1% of $50? $5. Is that right? No, that's percent.
Okay.
50 cents.
50 cents. Okay. So let's say you're risking
Hola.
playing with $500. Now 1% is $5. So if you put $500 into this trade, but you're not risking 500, you're risking $5. Now, a lot of times you might lose that $5 and now you have $4.95 and then you have $4.90. But every time you win the trade, I can't even read this. What would be your percentage? 24 times. So what's 24 times $5 or 25 times 5? $125. So you lose $5 on the trade, but if the trade goes well, you make $125. Obviously, you can lose lots of trades if that's your plan. You could keep losing $5 for a while. So one thing my teacher taught me that's useful, and I think we'll stop with this today. One thing my teacher taught me was he said, you know, with trading, this is not like a trading once a week type thing. Like to know if your system works, you know, looking at all these charts and the lines, to know if you're doing well, you might need to make, let's say 50 trades to know if it's working. But if you're only going to get maybe 50 or 60% of these trades right, and you make 50 trades, you might lose 20 times in a row and still be right. Because you don't know when the wins are going to come. It's not lose, lose, win, lose, lose, win, lose, lose, win. It's not like that. You might have a good system and still lose 10 times in a row. And a lot of people give up because they don't realize they have a good system. They just didn't hit the winning streak yet. All right, I think we can stop there for today. If you guys want to continue, what I would do next time is, I think it's important to know it's important to keep practicing with the Fibonacci lines, with the horizontal lines, and then to try to find these levels of support and resistance. And then it's important to add some of the indicators like RSI to see when something was at a good buy place, what was happening with those indicators. And you try to build up this sort of picture of it hit this line, it came to, you know, this place, and it had the other thing we didn't talk about today is W's and M's. You know, is there a W or an M? Did it hit the line? Where was the RSI? And you take those things, and then that's one of your, like, a photograph of what all the indicators should be for me to buy it. And then we look at a bunch of stocks and look to see, you know, it's, my old teacher used to say, if this is exciting, you're doing it wrong. This is not meant to be exciting. This is meant to be very like formulaic. And the other thing he said is winning and losing both produce dopamine rushes. So when you win or you lose, It's exciting and that's dangerous. So the point of trading is to take as much excitement out of it as possible. But then I hope it's not just me like showing you guys stuff. I know Min Soo trades, so I hope it's you guys also teaching me stuff.
Yeah, I'll see what I can teach you.
Well, it's nothing really else besides, you know, if you watched a video and they talked about some indicator that you thought was interesting, sharing that with the group. That's all it really is. I don't expect anybody to be a pro trader, but we all, I mean, I'm just a student of the market. I'm not particularly good at this. You know, I can teach it, but I'm not like able to support myself, you know, but that's something, it's a long-term goal. Nice haircut, man.
Yeah, I told you. It's difficult to find a good haircut here. When
Yeah.
you find it, keep it.
Yeah, it's a good fade. All right, then we just finished in time to see Nicola's haircut. So I'll see you guys next week.
All right, bye, David. Bye, Nicola.
All right. Bye bye.